What if you could stop feeling that knot in your stomach every time the market drops? When it comes to investing, most of us feel like we're on a wild roller coaster, either the clutching the bar in fear or just hoping for the best. This video is about taking back control. So whether you're a white-knuckler or a hands in the air type, in investing, as in roller coasters, your reaction isn't wrong. It's a product of your past experiences and your core beliefs about money. But what if I told you there's a way to feel less like a terrified kid and more like one enjoying the ride, without having to change your personality? It starts with understanding the real price of admission for investing and building a strategy that puts you in control of the ride. For business owners and successful professionals, your relationship with risk is often complex. You might have taken massive risks to build your success, but when it comes to your personal portfolio, many become intensely risk adverse. The market's ups and downs can feel unpredictable, which is a stark contrast to the calculated risks you've taken in your own business. This emotional friction often leads to poor decisions, such as selling low, missing out on rebounds, and ultimately sabotaging your long-term wealth goals. This video, and the series to follow it, is about separating the emotional from the mechanical. We're going to talk about how a disciplined approach to risk management isn't about eliminating volatility, but about harnessing it. It's about building a portfolio so that market dips can be viewed as opportunities and not as panic triggers. In the market, there are two primary types of risk you face: systematic risk and unsystematic risk. And your job isn't to fight them blindly, but understand how to manage each one. Systematic risk is the market's collective fear or confidence. It's the risk you can't diversify away from completely. Think of it as the price to the growth you're looking to achieve. It's driven by macroeconomic factors like interest rate changes, inflation, and global events. Many investors, and worse yet, active fund managers, believe they can time this risk, getting off the ride before the big drop and jumping back on before the next climb. But as a business owner, you know this is a near impossible feat. Chasing trends and making emotional exits can destroy more value than it creates. You manage this risk not by trying to time it, but by building a long-term plan that can withstand it. This often means establishing a clear investment policy statement and a disciplined rebalancing strategy, so you're buying low and selling high automatically and without emotion. It's about having a portfolio that is designed to endure the full length of the ride from beginning to end. This is the specific risk tied to a single company, industry, or investment strategy. It's the risk of your own choosing, and unlike systematic risk, it can be managed to a much higher degree. Many are comfortable with this risk in their own business, but when it comes to your investments, you might unintentionally take on too much of it by concentrating too much of your portfolio in a small number of stocks or sectors. This is the financial equivalent of riding a roller coaster with a lap bar, but the car is not secured to the track. This is where intentional design comes in. We manage unsystematic risk with diversification. We spread out our investments across different asset classes, industries, and geographies. It's about building a system so that if one safety point fails, you have others to provide additional layers of safety. The goal is to stop reacting to the market and start embracing its fluctuations. If you want a plan to help you do that, make sure to hit the subscribe button. In the next video, we'll talk about how to stress test your portfolio so you know exactly how it'll hold up in a market downturn. Also, I'd love to hear in the comments, are you the kid that's clutching the bar or the ones with your hands in the air? And what's one thing you do to manage that feeling?